The Hawaii Credit Union League would like to welcome you to Top of Mind Primary Financial Institution Focus on Payments. My name is Sandeep Kapoor, and I'm an educator with Digital Credence. The Hawaii Credit Union League would like to recognize FIS for sponsoring this education. Top of Mind PFI, Primary Financial Institution. I asked you to focus on payments. Why did I say that? Let's talk about what it would take to get there. But as we start, remember that payments, it's way more than just the card transaction. It's money movement. The member we serve transacts across channel. They have bills to pay. They buy, they repay loans. They do so much. They use their debit card and their credit card. What we have to do is align our strategy to make sure that what we do in this interactive capacity is complete, all the way from bill payment, account to account, P2P, debit, credit, checks, ACH, digital payments, which is the Google, Samsung, Apple Pay wallets, and even bill management, which is essentially making sure that we are assisting our member with these transactions. That is important. And we need to think about all these factors as we put together a comprehensive payment strategy. And let's go back and reflect on something that I've talked about in the past, and that is the core of our promise. As financial institutions, we serve those who save by giving them a place to deposit their money. From our perspective, we want to reduce that cost. We serve those that need to borrow from us. Those are the people that drive our loans, and it helps with our earnings. But we also serve those that transact. Transactions, payments, money movement, it's about building revenue. It's about building a relationship, and it's about branding. The key here is that by focusing on these everyday, regularly scheduled, and impromptu transactions, we're focusing on what's important. There is a need for money. There is a need for money movement. We have to serve our transactors. And as if you think about this, how can we leverage the tip of this pyramid, the tip of this triangle to serve members? This golden triangle is important because by leading with payments, there is a lot we can do to engage our members, stay in touch with them, and do so much more. When I talk about today's presentation, I'm going to talk about it from three aspects. I'm going to talk about the 5 pillars of our payment strategy. I'm going to talk about 5 big things we need to do to make sure it's effective. And I'm also going to talk about the 5 things that will keep us top of mind with the consumer that we serve. Let's start with the 5 pillars. The first pillar is about superior service. And when you think about superior service, think about that transaction on Uber. When you order the vehicle, you know who is coming, you know what type of vehicle is picking you up, you know the way you're going to get there, you know how much money you're going to have to pay. It's all there. There is complete transparency. Why do we not build our strategy around how do we give our consumer complete insight into their interactions? We build that security, we build that trust. They depend on us, they expect perfection from us. That is superior service. The second part is we have to focus on what do we do to drive earnings. We have interchange income and interest income that we can earn out here. Two fundamental things have to be done. Number one, we have to boost adoption of our payments, including our cards. And two, we need to keep reminding the consumer, our member, to use our payment instruments. The more people that adopt and the more people that use, it encourages usage. The volumes go up, and this is what drives our income, which is fundamental to our success. The third pillar is around fraud. There are two aspects to this. Remember this, that if you speed up the transaction, you run the risk of fraud. But if you slow it down, or if you come in and you stop the real consumer, you run into this concept of a false positive. A false positive is when I stop a consumer from using their own card, which is a legitimate transaction. So our strategy should be balanced, but a lot of this also will come from the solution provider that you choose, because you have to be able to leverage artificial intelligence, neural networks, AI, to try to solve for this problem so you can effectively do a smooth transaction. The fourth pillar is about innovation. And simply stated, this means that we deliver what fintech has been doing and delivering for the consumers that we have. Are we Venmo like? Are we PayPal like? Can we give the consumer what these fintech brands are doing? Which means the ability to easily send money, accept money, swipe, card controls, using this data to have valuable insight. The thing is, we've got to see what is it that fintech delivers so we can keep designing and delivering upon those experiences so we do not look archaic. The fifth strategy is around consistent experiences. And the one thing when I started this presentation off, I showed you that there are many different ways to interact and to pay. And what we've got to do is we've got to simplify how our systems are used. We need to make sure that our member service representatives understand it and are able to articulate clearly the message to the member we serve, so our member finds it easy and the experiences are consistent. Because if they are not consistent, we turn the member off and the member stops using what needs to be done. So from the 5 pillars, let's look now at the 5 key elements to drive our strategy. I am sure nobody is walking into a brand new program. So when you are looking to resolve or fix your program, start by first looking at your interface. The user interface for business and consumer transactions, it needs to be enhanced. It has to be easy. It has to make it convenient. It's got to attract them, make it appealing so they can transact effectively. And they should be able to do this on their computer, on their mobile device, and also do it on the go. So what we have to do here is start looking at typical journeys, what needs to be done, and execute on those transactions. The second key element is that anytime we make a payment from one point to another, whether it is a one-time transaction or a multi-month recurring transaction, we're connecting to multiple systems. We have to make sure that the integration is managed effectively, which means that the platform or the platforms we have, they need to make sure that we are minimizing the amount of touches by the consumer to complete the transaction. If we recognize the consumer, perhaps we take one step to authenticate them. Why shouldn't I be able to get into my system and say, pay mom the usual amount, pay my electricity bill, ask them questions about what needs to be done if I have done this before? Why do we need to make that member go through this process all over again? The third key element is insight. Insight all the way from bill management, reminding the member when their bill is due, how much it's due. Perhaps they are being charged a little more this month than the past month. Perhaps something has changed. Reminding them about all of this, make the data actionable. Remind them about this because this is what is valuable, and it allows you to go in and understand what that member is doing so you can provide back more value to that member. The fourth element is about digitization. All the way from digital adoption to issuance to disbursement to digital transactions, why don't we think digital first? And digital first basically means that can I deliver this digitally before I engage those other channels? All the way from the application of a card to the communication of what that card is to ultimately, why can we not issue the card digitally? And one key element here is mobile payments and mobile adoption. Think about the time we are in today. We are struggling with touching people, touching cash. We're talking about contactless. What we've really got to do is put our cards into our member's mobile device, and then what we do is we have solved two critical problems. Number one, we're giving them ease and speed, and number two, we're making it even more secure. That process of digitization needs to be looked at because we need to keep enhancing it to make it even better. The fifth key element is we have to be agile. We need to keep emulating fintech, beating fintech. Fintech continues to announce enhancements every day. They're making these. Traditionally, as traditional financial institutions, we've always looked at these as saying that, do we need to disrupt our members and keep introducing change? The reality is, yes, we have to do that. We have to bring changes and enhancements to the market with agility, just like fintech does. The consumer expects it. So from the 5 key pillars, we talked about the 5 key elements. Now let us look at what makes us top of mind, what drives us to become that primary financial institution. It's 5 key elements. Number one, what kind of brand message can our brand deliver to that member? Can we convince the member that by wearing our brand, it adds value? They look good. We need to keep reminding them of our commitment to the community, our commitment to their financial well-being. That is a significant branding message that we need to get across. The second aspect is about convenience. We have to tell them and show them that our card is easy to use, and it's not just easy to use as a physical card, it can be used across channel. Oh, and if you want to use bill payment, again, we want to offer them that convenience and ease so they can do that effectively. Number three, we want to assure them that they are protected, they are safe. We are doing everything in our power to not only ensure that their data is protected, but every single transaction is protected. And every now and then we may reach out to them and talk to them about their purchase, but we are looking out for their well-being. And this is something that needs to be stressed again and again. It's about transparency. Remember, I talked about that Uber-esque experience? Everything should be in the know. They should know what to expect, when to expect, and consistency is a hallmark of all of that. How we communicate with them based on every transaction is something we should be consistent with. That helps and goes a long way. The fifth key element is about incentives. And let me clarify the incentives to provide more. Many times we may not be able to compete with some of the larger financial institutions based on some of the incentive these larger financial institutions provide to members. What we have to do here is remind them, the consumer, that they get rewarded by using our payment brands, and also think about the aspect of reminding them of the overall value our brand is giving to them. So all the way from branding, convenience, security, transparency, and incentives, we've got to consistently communicate with our consumer, reminding them that we do more for them, continue to get into their mind with daily payments, daily interactions, and remind them that we have the bandwidth and the infrastructure to become their primary financial institution. I had an opportunity to review my presentation with the league prior to today, and I have with me 5 questions that have been put forth. I'm going to read every question and attempt to answer them the best I can. Question number 1. How should we boost the adoption of payments with new members and with existing members? The existing members who are probably already so set in their ways. 3 big things I want to highlight. Number 1, we need to educate our front line by giving them short elevator pitches and understanding of what each payment instrument is capable of, what our functionality is. Because that front line is the one that is going to initiate and start the relationship with those new members. But then we also need to leverage them to reach out to those that are coming back to our branch, or perhaps we get them to pick up the phone and interact with the members to get them comfortable with our payment options. The second aspect here is we have to simplify our online resources on how people pay and transact. And by simplify, I'll say one thing: let's start by making it easy to find. The third aspect is share real examples, real testimonials, real question and answers, and start thinking about perhaps even hosting calls, hosting events, surveying our members and asking them what is it that they are looking for from their financial institution so we can provide that value back to them. The second question goes as follows. Elaborate some more on the superior service pillar. Isn't everybody's mantra about superior service? What can a credit union do to compete with larger card providers? I notice that many people, their top of wallet card is typically one of the large brands, because that large brand is giving them back more money, perhaps airline points, perhaps some sort of online digitized value. But I feel that as we compete in that environment, we need to stress on three vital elements. Number one, can we talk about personalized interaction, which means that I am now communicating with a member based on their personal needs. I'm helping them out. I'm explaining to them how our cards and our payment instruments work. And we're not just a card, but we're all about those different elements that make up money movement. The second aspect is that we as a credit union offer bundled value, meaning that we offer loans, we offer deposits, and we offer payments. And the total of all of these adds a lot to how we can serve you. The third key element is that we have to maintain constant interaction with the member that we serve, because ultimately this is what drives even more value. The third question goes as follows. There is a lot of data in transactions that can provide insight, but isn't it creepy to a member to know that what they are doing is being tracked? I'm sure if you look at it from that perspective, it may appear to be that way, but let me share my personal anecdotes and experiences with you. I ate a meal, I bought a sandwich for $8, and I got a $12 tip on it. I was immediately contacted by my card company, and my card company asked me a question. Did you mean to be so generous? In that particular instance, it was a legitimate transaction. I paid more as a tip, as gratuity, rather than paying for the sandwich, because my card company did not know that I spent 3 hours at that restaurant and I needed to do something to make up for that. I also was filling up gas at the gas station on a rental car, and I thought $2 would be enough. So I put $2. I went back to my car. I started it and I said, oh, that's not enough. Let me put in $2 more because I didn't want to overfill it. I wanted to return it back just enough. And sure enough, I got an alert from my card company again saying, is that really you? Because there's a duplicate transaction. You see, when there are intrusions like that, and if they are worded appropriately, to me, it sounds like it's in my best interest. They're looking into my wallet, but they're doing it to help me. So I know there is a lot of data, and while it may be creepy, you're actually being helpful. And that is the primary message we need to get across to the member that we are serving. My sincere appreciation to both the Hawaii Credit Union League and to FIS for sponsoring this education and bringing all of us together.